to a lot of people who are skeptical, right now seems like a lot of people want to take the victory lap and think that these things have sort of crashed. I'm not saying you are doing that, but I see it on Twitter. A lot of people are like, oh, I told you so, and things like that. But I just think, like, if that's what you think, you have no idea what's really going on. In my opinion, almost nobody has any real idea of what's actually going on, and it is going to be so much bigger than most people can even think. If you look at what's going on from a macro lens right now, it looks like the Trump administration, Scott Bessent, etc., they want gold and Bitcoin to go up a lot.
Mark starts by making a crucial distinction. We don't really want money. What we want are goods and services. Money is just the medium that helps us get them. So when governments print more money, what they're actually doing is diluting your ability to buy those goods and services. In other words, they're stealing value from your savings, not through taxes, but through inflation. Now, this is where Bitcoin stands apart. Bitcoin has a fixed supply of 21 million coins, and that means if you own one Bitcoin, you own 1/21 millionth of the world's total Bitcoin wealth, forever.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, I don't mean infinite upside. I do believe it's infinite. And I'm going to tell you why, and then I'm going to tell you what prices are when it's a million. So number one, why I think it's infinite. So we have to sort of understand this core basic truth that you and I nobody, people, we don't want money. Money is not wealth. What we want is goods and services. That's the wealth. But we use the money to get the goods and services, right? So that's why it's a medium of exchange, right? So we hold money until we decide we want the goods and services. So really, if goods and services are wealth, money is just the medium that we use to exchange for that. Really what we have is all the wealth of the world divided by all the money of the world. Which is why when the government prints more money, it goes down in value and it takes more money to buy the goods and services, right? Okay, so if you understand that, then what you would realize is that if I had a company that was worth $1 million, you invested 10%, you gave me $100,000, and you had 10% of that company. When I grew it from $1 million to 10 million or 10 billion, your value of that 10% would go up unless I diluted you, right? Unless I diluted your stock ownership. So that's what happens when they print more money. As the wealth of the world goes up, which it always does, right? 300 years ago, before the Industrial Revolution, we basically lived in dirt. We didn't build more than 2 stories. We didn't have steel. We had no mechanized machines. So in the last 300 years, all this wealth has been created. And it will continue because humans have creativity and ingenuity. And so the wealth will continue to go up. We'll continue to invent new things and build new things. But as the wealth goes up, they keep printing more money, so we get diluted. But with Bitcoin, because it has a fixed supply, if we own one Bitcoin, we will own 1/21 millionth of that. Now, and I project out where I think Bitcoin is in 2030, 2040, and 2050. The government, the CBO office, projects out the government budgets through 2054. So we have like 30 years of time frame. And then I overlaid S-curve, I overlaid a 50-year tech cycle, the 4 phases of this blueprint, and I overlaid a bunch of things. And basically the spoiler alert is that I believe sometime after 2050, maybe 2055, Bitcoin becomes the unit of account. And that means things are now priced in Bitcoin. If Bitcoin becomes the unit of account, now one Bitcoin equals 1/21 millionth of all the wealth of the world. And as the wealth of the world continues to go up, I never get diluted, which is why it goes up infinitely. If you look at what's going on from a macro lens right now, it looks like the Trump administration, Scott Bessent, etc., they want gold and Bitcoin to go up a lot.
Yep.
And part of the reason why I believe they want gold and Bitcoin to go up a lot is it works as this liquidity sponge. For what the Trump administration needs to do for this, Operation Warp Speed of reindustrializing the U.S., we need a lot of money, a lot. we need interest rates at 0 or 1%. Like, we need to let those money printers go. When Elon Musk left Doge, Scott Bessent said the same thing. They both said, well, we have to grow our way out.
Grow our way. Yep.
So what happens is when they bring interest rates down and they turn those money printers on so we can grow our way out, that causes inflation. And inflation makes people unhappy. And then we have all types of societal problems and people get all mad, right? So what if we do that? But what we do is we let gold and Bitcoin absorb all that liquidity. So home prices don't go up that much. Stock prices don't go up that much. It goes all to Bitcoin and gold. So that could theoretically keep the prices down. To a lot of people who are skeptical, right now seems like a lot of people want to take the victory lap and think that these things have sort of crashed. I'm not saying you are doing that, but I see it on Twitter. A lot of people are like, "Oh, I told you so," and things like that. But I just think, like, if that's what you think, you have no idea what's really going on. In my opinion, almost nobody has any real idea of what's actually going on, and it is going to be so much bigger than most people can even think. Do I think that Bitcoin's price will be higher or lower in the future? So if for example, I think that if I wait, I could potentially get Bitcoin cheaper. I think Bitcoin's going to have a 50% crash, so I'm going to wait. Okay, it could. I mean, but that's probable.
Yeah.
So then what do I think? What's my best guess? What is my percentage I would assign to that? Do I think there's a 25% chance it drops 50%?
And you also have to assign that percentage to it doing it from this price. Because how many times are you right, but it doubles and then goes back 50%, you're right back where you started. Yeah, good luck.
So many times, Scott, over the years.
I was right. It drew back 50% to where I was now. Yeah, great.
Yeah, man. I remember a couple years ago, I think coming in out of the 22 bottoms into 2023, I think it was in the 50 range, and it was running, and I was making some buys, and then I thought I was going to pull back, so I put 50% in, and then I put a buy order in at a lower level, and it never filled, and it just ran away, and it's like, why did I
didn't mean to interrupt your thought though. Yeah, you were kind of breaking it down.
But the point I was going to make is that I have to make an educated guess, and I should do my own research, and I should think hard about this, but I would assign a probability. I think there's a 20% chance I can get it at a discount, or a 50% chance, or whatever that number is to me. And then I would allocate my position accordingly. So if I think there's a 25% chance I can get it for cheaper, then I would maybe allocate 75% of my money today, and I would hold the 25% for that chance I could get it cheaper. Or it's 50-50 or whatever. So that's how I would think about it personally. Now, that's if I have a lump sum. Most people are sort of allocating as they get paid.
Yeah.
And so if that's the case, then just DCA, dollar cost average in. That's the best way to do it.
Sailor. Yep.
So those are the two things. If I have a lump sum, I came into some money for some reason or whatever, then that's how I would think about the allocation. Should I buy now or wait? If I'm just earning off my paychecks and putting in, then I would just DCA in. Now, as a Bitcoin treasury company, the way that we think about it is that we're getting paid to buy Bitcoin, not dollars. And so what we want to do, and actually Sailor talks about this quite often, but what we want to do is convert that dollars into Bitcoin as quickly as possible. And Sailor talks about this when you think about traditional companies. If I were to invest into a real estate deal, for example, so I'm going to buy into one of Grant Cardone's multifamily projects or whatever, right? Like, it could take 5 years for that money to actually get put into work. Right? If I'm going to invest into, Tesla's new, plant, like how long does it take to get that plant built or whatever? But where a Sailor can take 50 billion in today and within 1 hour have it placed. And so really, I think it's about the speed and the time. And so as a treasury company, we're not trying to time the market. We believe in that long-term appreciation. Our goal is to take whatever money we can get converted over immediately. And so those are the two different ways we'd look at it.
Many investors still talk about Bitcoin's famous 4-year halving cycle. But Mark Moss believes that cycle may not be driven by halvings at all, but rather by global liquidity cycles. He points out that since 2008, when the world entered the era of zero interest rate policy, most global debt has matured and been refinanced roughly every 3 to 5 years, creating a 4-year rhythm in global liquidity. This same cycle aligns with U.S. presidential terms, and coincidentally with Bitcoin halvings, in Mark's view, Bitcoin's price movements have been less about block rewards and more about how much liquidity is available globally. When liquidity expands, risk assets like Bitcoin surge.
If you've ever held Bitcoin for more than 4 years, no matter what point you bought it in, you'd always be up. So you could have bought it at any of the peaks, like in 2017 or 2021, and you would have been okay if you would have held it that long, number one. But as far as like, do I think the 4-year cycle is over? It's sort of like a meme today. The view that I have on that, and maybe about a year and a half ago, I kind of came onto this realization that I don't think it was really the halving cycle that was driving Bitcoin's price in this 4-year cycle. It was the global liquidity cycle that was driving it. And what happened is, we talk about all these bonds. So we have all this debt. We're in a debt-based monetary system. So the whole world's driven by debt. And you have debt from months all the way up to 30 years at all different durations. And if your bank called you and said, hey, we're going to lower your interest rate to 0, do you want to refinance? You're like, yeah, of course. So what happened is in 2008, when we had the great financial crash, the entire financial system collapsed. And all of the world coordinated together, dropped rates to ZIRP, right? 0 interest rates. And so, of course, everybody refinanced. And what it did is it brought all those durations to one point in 2008. And we saw over the last now, however long that's been, 15 years or so, we've seen the average duration of global debt, 75% of it has been within a 3 to 5 year range, which means about 4 years. And so what happens is about every 4 years, that debt has to be refinanced. And if you just put that in a time frame, so 2008, 4 years, 2012, 2016, 2020, 2024, which just so happens to be the 4-year time halving cycle, which also just so happens to be the 4-year presidential cycle, yeah. Right? So I think that's really that's the dog that was wagging the tail of the Bitcoin halving cycle. And I think if we look back, so a lot of people, number one, if enough people believe it to be true, they could make it true. So, if a lot of people are going to start selling Bitcoin today, I guess that could push the price down. But I think there's enough sustained bid to hold that up. But I'd say if people that are looking back and going saying, well, it's exactly 4 years from November of 2021, and now here we are, almost November of 2025, we should probably be selling. We're at the top of the cycle. But anyone that has half a brain and sort of looks at it realizes we're in a completely different environment, right? Like in November 2021, Jerome Powell announced to go on to the fastest hiking cycle in Fed history. And right now, he's cutting rates at like the fastest time in history, right? Trump has openly said over and over he wants rates to be at 1%.
Yep.
And he gets what he wants. My guess is before he leaves office, rates are there.
I mean, Powell's gone in May. Whether you believe Powell's going to do it or not, you know exactly what kind of person's coming in.
Yeah. So I think there's that. So I'm guessing before Trump leaves, we're close to that. And so that's 3 years of acceleration. And then you look at even the bigger macro picture, which is, I believe that we are going into the greatest industrialization that we've seen since World War II. U.S. and China are literally in a nuclear or space race to build out AI and capture that future. Trump is trying to reindustrialize the U.S. and bring the chips and all of that back. We're trying to, push nuclear reactors and energy through. And so what happens in those events is that both China and the U.S. and other people will benefit from that, will spend whatever it takes, not price-conscious buyers, whatever it takes. And so you add all those couple factors in, and I think it looks a lot different than it was in 2021 or 2017.
Mark believes we are on the verge of the largest industrial transformation since World War II. The U.S. and China are racing to dominate artificial intelligence, robotics, and energy. This isn't just an economic competition, it's a technological arms race. Rebuilding infrastructure, producing microchips domestically, and powering the AI revolution will require massive capital investment. And where will that money come from? From the same place it always comes from, the printing press. As the government spends whatever it takes to win this new industrial age, scarce assets like Bitcoin will become the ultimate beneficiaries.